All right, and welcome to the Blacklist sessions. It's a brand new episode. I think we're up to number 11, which is really exciting. We've had some great guests, and I'm really excited for our next guest, all the way from South Australia. We have Lyndon Holland from CBD Insurance. How are you?
Oh, I'm excellent, Jay. Thank you, and thank you for the invitation. It's really exciting to be here.
Yeah, I'm so grateful to have you on because you've done some quite incredible stuff from what I've been reading with your life, and I'd be really interested to hear a lot of it through the episode. So to start off with, I'd like to hear about your journey, about how you got into running your own business.
Wow, that's an interesting question. I didn't finish school. I went through to year 9 or just started year 10, and Mum sent me out to work, and I was a sheet metal worker, so tough sort of job. I was involved in having some metal splinters into my hand, and when the owner of the business found out that I had metal splinters, he asked me to leave. So it only lasted a few weeks, but it was interesting. I made the fans that went into the Westinghouse fan-forced ovens. From there, I decided that I wasn't going to work hard like that anymore, so I looked around and looked for different avenues. Found a job in finance and insurance at a motor vehicle dealership for a couple of months, then looked around for something that really excited me.
Yeah, fantastic. It seems like an interesting journey, because I know a lot of people when they're looking to start a business, the thing that they really get stuck against is like the uncertainty, because a lot of people feel really safe in a 9 to 5 job, and they just do that, and they're like, I'd like to take this risk, but I've got this going and this going, and there seems to be a lot of excuses, and of course it can be quite challenging, especially if you've got like responsibilities beyond yourself. So what do you think it was that got you to take that leap to, I guess, jump into the unknown?
Yeah, look, the unknown is an interesting one. I mean, the uncertainty and unknown is a fear that you develop that really you need to learn to push aside and push through. Mm-hmm. I took on the unknown because I wanted to have a bit of better life than what I was used to, and I wanted to build some credibility. I wanted to, at that time, help people and help people understand what it was to save themselves against risk. And as it's grown over the last nearly 40 years, it's just been an incredible journey and what I've seen people do. And we've been able to educate some, and others just don't understand it at all. It's incredible.
Yeah, that's right. Some people, they just don't get it.
No.
It's it has been quite amazing, even within my lifetime. I'm 28, and just seeing like how much more you can get insured for these days. I was seeing ads for like pet insurance and all these new things that I just don't remember when I was a kid. So I guess, what are some of the more interesting things that you would insure?
Yeah, well, that's interesting. I've had a couple of phone calls from big corporations about the coronavirus and are we insured against that, or could we be insured against that? Most definitely. I mean, most policies, or a lot of policies, exclude pandemics. Mm-hmm. A lot of people are finding out that if they contract the coronavirus whilst they're in their own country, or they've not travelled or whatever, they're excluded from that. So it's those sorts of things come up now when this happens, and certainly it's something you can go to the world and ask them to provide cover for it, because the disruptions are huge. I mean, Qantas is already saying it's lost $150 million, and for a small business to lose $20,000 or $100,000 could be devastating. So you need to insure against the known and the unknown, and it's the unknown that always gets us.
Yeah, that's right. If you know about it, you can prepare. But I guess it's great to talk to people who are experts and would see these kind of things pop up, because this kind of came out of nowhere, and all of a sudden it was this massive thing. And yeah, like as you said, like Qantas losing $150 million, like that's not a small sum. And I know even for my own business, not with the coronavirus, but just the fires, like we had quite a few things cancelled because they were just like so devastating and so widespread. And like maybe the government could have known about it and done a better job, but sometimes not.
Yeah, with the fires, that's an interesting one. I've got too much of an opinion on that. I think that we've, as a government and as a country, we've neglected to identify the risks and put in effective controls to actually stop it. It could be prevented so easily. And considering that 3 months earlier, in California, half of California burned down. So we should have said, well, hang on a minute, we're denser than that, we're drier than that. If that can happen in California, what's going to happen here? We could have prevented a lot of loss, any loss of life, really, from human life, by having a proper risk register, documenting it, and putting in effective controls. Corporations, governments, small business are the same. And when I ask somebody, do you have a risk register? Have you checked the controls? Do they work? Are they effective? They just look at me like Mona Lisa.
Yeah, that's crazy. I think something I noticed that was quite a similarity between the Australian government and the Chinese government was that they seem to be really slow to react when it was pretty clear that it was going to become a bigger thing. So I guess if you translate that from government to small businesses, I guess you really need to be prepared for those risks, because you never know when they're going to pop up and become quite a big thing.
Yeah, I mean, when the government writes standards and the ISO 9001 and those sorts of things, and they talk to you about how to identify risks and do whatever you need to prevent, they just don't implement it. They just don't look at it correctly. Sometimes the ideas that come out of people's mouths are just incredible. I don't believe it. They don't identify a risk properly. They don't identify it by the likelihood and the consequences, and that's what it is. So some of the examples are, we've seen in the Australian Navy, they had a ladder as a risk, and when we approached them, and my good friend Rod said to them, what's the risk of the ladder? They said, well, the ladder's a risk. And he said, well, the ladder doesn't jump out of the cupboard.
Yep.
What the risk is improper use of the ladder, causing somebody to fall off, causing injury or death. That's the risk. The ladder's not a risk.
Yep.
And a couple of other examples, hospitals' registers normally have food poisoning on their register as a risk. It's no risk at all, Jay, if it's not distributed. The risk is when it's distributed, consumed, and causes an outbreak. But if you catch it at the kitchen, there's no risk.
Yep, so it's definitely about being more specific.
Yes.
And really nutting down on what it actually is, the specific thing, right?
Yeah, it's the resultant damage. You know, speeding's not a risk unless you get caught. It's the fine or it's the accident.
Yep, or the tree.
Yeah, that's right. So, you know, you've got to understand what the resultant damage is, and that's what people don't identify. They don't. When they say, "Oh, there's a risk of, death caused by this or by that," and then certain things such as the Air Force or the Army call the loss of life, collateral damage, and they're incredible when they look at their risk register and the way they identify a thing in logistics and those sorts of things. But it's not passed on to everybody. When we become accountants and we graduate, or lawyers or whatever, they don't teach us how to run a business. They don't teach us how to identify a risk. They just teach us what they do, and we move on, and we're by ourselves and alone. So we really need to implement that in educating people, and that's what we do. We educate people. We help them identify what the resultant damage could be, what the risk is, and how to mitigate and transfer the risk somewhere else.
Yeah, I think that's something great, because a lot of people kind of like disregard it and they don't think about it until something really bad happens. Then like, oh God, I wish I was prepared.
Yeah, it's a lot of self-employeds don't have income protection insurance. Now, my biggest asset is my ability to earn an income, and if my income stops, I can't pay the mortgage, I can't pay the school, and they go, oh, it will never happen to me. Don't kid yourself, it happens to a lot of people, and there is probably 3 chances in a lifetime that you will suffer some sort of disability. And if it's a major one, it could cause a loss of home, divorce, lots of things that you really don't think of. And what I don't understand and what I don't get, Jay, is that people don't seem to understand or care. I don't know if it's the care. I think it's they just don't understand what the damage could be and what that looks like when it happens.
Yes, definitely. So with your background in risk management, you're an expert in the area. Was that something that really helped you to starting your own business?
Look, it's something that I've developed over a few years. I completed my advanced diploma in governance, risk and compliance a few years back now, and I realised in doing that we were identifying risks incorrectly, and I needed to be able to help people with their mitigation programs, their risk profiles and those sorts of things, how to understand it. Because we saw things popping up all the time. And when we did our course with Paladin in Canberra, Rod Farrer showed us a different way of identifying risks, and it's a new breed and it's a new thing. It's created some excitement throughout the industry, yet some people still don't understand it, so we need to get that message out.
Yeah, well, that's it. I mean, as technology goes on and things improve and change, there's so many more risks that end up popping up. Like, I guess maybe 30 years ago, the risk of cyber crimes and things like that would have been a lot lower than they are now. So is that something you've seen an increase in your business?
Yeah, look, cyber's an interesting one. We see about 3 or 4 million attacks at a time of cyber around the globe. And if you just Google cyber attacks now, it shows you a world map of them actually trying to get into people's systems. 3 million sounds like a lot, but when you're talking about the globe, it's a very, very small amount. We've seen it destroy businesses. We saw it destroy TNT many years ago, and now Toll have fallen victim of exactly the same thing. So even the big corporates, the world giants, still get affected by these things. And as a small business goes, don't think that you're immune, because you're not, because it doesn't matter to them. All they want is their money, and if they can get 5,000 out of you, or 10,000 or 20,000, they'll do it. And we find that a lot of people go, well, if I go 5 or 6 days through this and I don't pay it, it's going to cripple my business. You can insure yourself against that, and the insurance companies step in, they negotiate, they help you rebuild everything around it. The worst thing you can do is actually pay it, because you don't know who you're paying, and you could be funding a terrorist group. And therefore, under the Privacy Act and the Corporations Act and the Terrorist Act, you could be actually committing a criminal offence.
Yeah, well, that's a lot of something really interesting that a lot of people wouldn't even think of, because they just want their stuff back, and then, inadvertently funding a terrorism group or an attack, which is pretty crazy when you think about it.
Yeah, and most people wouldn't know that. They wouldn't understand that. It's day to day. I mean, there is a 1,000 different conditions on a director in a company to comply with the Australian Securities and Investment Commission's Corporations Act. You just don't know all of those. So daily, we actually break the law. If you don't have insurance or mitigation to prevent the risk from crippling your business, it's actually against the law to do that, because you have to do it. Not that they implement it, but if it causes loss of shareholders' money and those sorts of things, you could be criminally charged. So you need to make sure that you're covered for all of those risks. Yeah,
well, that is something really important to get insured against. A few episodes ago, I had a chat to a guy named Mario Beckus, and he's an international spy, and he uncovers like cases of fraud and things like that. And he had a fantastic example of where people would basically get access to servers. They wouldn't even go through the internet to do it, but they would go and speak to someone who's on, quite a low wage and collect all that information and then find a way to get in. So there's so many different ways that people can get into a centralized server. Like in the case of Amazon, like everyone puts their stuff on the cloud and they do a lot of cloud computing. But that's something that can be quite dangerous in this day and age. So it makes even more sense to insure against that.
Yeah, it's really interesting. Yesterday I was talking to an Uber driver, and he was from the Department of Defence from the UK, and he's moved to Australia. Now, he's got the highest clearance in the world as far as security, because that's what he does, data and data transfer, and his security's been knocked back in Australia because he knows too much information, and they're suggesting that he might be somebody who might be a risk. So it's really, really serious. The global cyber risk attacks are very, very serious. And today the fines in Europe, if you're importing or exporting, or you're taking money over the internet and you breach the European privacy laws, you could be up for fines for $100 million. And they've issued $100 million fines to corporations in Europe. Australia, not quite so bad. $10 million is the fine, or the maximum fine. and there's lots of risk. If you're exporting from China or you're exporting from Slovakia or somewhere around the world and your goods are sold in Australia, you become the manufacturer under Australian law. So the risk is, and people say, well, I don't cover the warranty, I don't cover it. Well, under law in Australia, if you bring it here, you are the manufacturer and you've deemed to have to, under consumer laws, cover that risk or cover that warranty. So a lot of people don't understand that when they're doing it through the internet. You're still going to be exposed to those laws worldwide.
Definitely. And yeah, as the world has become a lot more globalized, you would see that a lot. I guess you'd be working with a lot of companies that would be exporting and importing from overseas. So you'd have to be across all the laws and regulations, restrictions, all that kind of thing, like worldwide. So that must be a pretty big job.
Yeah, look, it is an interesting job. I went to see somebody June last year and they were into freight management. And so that's what they did. They didn't have any trucks or anything else, but they imported, exported, did all of those sorts of things. They didn't have any liability insurance at all.
At all.
They were turning over $500 million a year and they didn't understand that they needed to have that liability insurance or marine cargo insurance. And when you talk about marine cargo insurance, a lot of people who have trucks in Australia have marine cargo insurance, but marine cargo is quite specific. You have to have a journey on the water.
Yep.
For the insurance to be effective. So there's a lot of people out there running around in their trucks with marine cargo insurance who aren't insured correctly, in my opinion.
Yep. Wild. That's crazy, yeah. And I guess that's why it makes sense to talk to someone that knows, because there's a lot of legalities. Like, the law is very complicated, I think on purpose.
I agree.
Because I'm sure there's very specific circumstances that have happened in the past, and they go, okay, we have to write a law exactly for this and exactly for this. And, you know, that became the law in the tax code.
Yeah, it's interesting. Kerry Packer, when he was interviewed by the Senate many, many years ago, said to them, you make all these laws, but you don't repeal the old ones. So you just keep making a law to suit you, and it becomes confusing because they go back to that one and they come to this one, and we're referring to law back in 1803 and here we are in 1993. And so it's really, really interesting how they go about it, and they keep introducing them, and we're supposed to know them as small business people.
Yeah, it certainly is very hard. I would like to see some of the red tape reduced, to be honest. You know, because I think it'll just lead to better results for Australia. Like, I read an article the other day. Australia's dropped again in the global innovation standards, and it's something that we used to be really good at. I mean, like, we invented Wi-Fi. Like, we're a great country. So I would like to see some of that rolled back, and I think we would be able to do a lot better and innovate a lot better if that was one of the things that happened.
Yeah, look, it's really interesting that there is so much red tape out there, and there's so many conditions. The Australian Securities and Investment Commission and the Treasury Department at the moment are hammering insurance companies and banks, and they're just making legislation stupid. And I don't mean to say that to be disrespectful, but you know, there is certain legislation in there that you can't do and you can't comply with, or the compliance is just so much. All you're doing is spending time complying and not earning any income. And so it's just gone from one extreme to another. And when they change the law, they go from one extreme to another, and you're supposed to comply with that, or you're supposed to understand it. When you're talking with a simple person, sometimes you just can't do it.
Yeah, that's right. You know, it's I've noticed even for my business, just running a small operation, like things like the compliance does take up a lot more time than I would like to. And like we've been going through the process of building a house, and the amount of regulation that you have to get through to get that makes it so time consuming, because we're just looking to move in, you know?
Yeah, it's interesting, isn't it? I mean, and the reason for that is that we have people who are dishonest, and they use the wrong material, they do the wrong thing, then we have a disaster. So they're trying to prevent risks from happening, and I get that, and I understand that. It's one of my passions at the moment when we talk about if you just do your job right, then everybody else will be able to flow along with that. But it doesn't always happen.
Yeah, I think that's a fantastic point. I would like to see everyone do their jobs properly, and that would be really good.
Yeah, it would. I mean, I had my bathroom renovated a year ago, and the guy came out and he was lovely and he did the job, and then I had a building inspector come and check it, and the job wasn't quite right, and I didn't finish the last payment, and the guy threatened my life. And you just go, So when I checked with Consumer Affairs, who regulates builders in South Australia, they said, there's nothing we can do about it. And I said to him, well, he doesn't have any insurance. How can you allow that to happen? And they said, well, we can't monitor everything. I said, well, you get a renewal every year of his licence. Surely it's easy just to put insurance with it, provide a certificate of currency with it, and communicate with the insurance companies. If they cancel it, the insurance company has to tell you. It's not that much more to do, but they weren't interested.
Yeah, man, that must be so frustrating. And yeah, it really does come down to people just doing the job and just that competency. So what I try and do is I surround myself with people that are really competent. It's those people that are doing great things and really want to succeed and just do right by everyone else. So I guess when you were scaling out your business, that's obviously quite a challenging thing for a lot of people to do. What was the process? How did you get the right team of people there?
It's really interesting. I mean, you've got to do your research like you do anything. If you do your research thoroughly, you will come out with the right results. So you need to educate yourself, make sure that the people you have around you have the education or the experience to understand what it is that you're trying to build. So when you're building a new business and you're starting from the ground, you really do need to have your business plan in place. You need to have your risk register in place and identify where you're going and how you're going to do that. And you hear likes of Richard Branson, good friend of mine, Jerry Harvey, talk about, just have your daily goals, write them down daily, and go out and achieve them on a daily. Don't go out for a Ferrari immediately. Go and put your goals and your eyes on the Mini, and then move up to the Mercedes and then the Ferrari. And you do this in small baby steps. A lot of people grow really, really quickly. We've got some young entrepreneurs around the country that are growing so fast, and yet they get to a certain stage and they just fall apart. And so you need to have good, strong foundations.
Yeah, and I think a lot of it is they get comfortable. They achieve a certain level of success and they go, oh yeah, this is pretty good. I don't need to work as hard anymore. But one of the things I do to mitigate that is what I'll do is anytime my bank account goes over $2,000, that money is either in stocks or in real estate in the mortgage to help pay off that debt. So I've got $2,000 to my name. That's all I've got. I need to go out and I need to really make things happen.
Yeah, what a great thing to do. I mean, and that's what it should be. You should always have that goal and work towards it. Well done.
Yeah, I think you just got to stay hungry. And I'm really passionate about making music videos and filming for people. And it's something that has changed the country industry quite a lot in the last few years, which I've been really excited to be part of. And I think the thing that's really led to that is just having that passion and that drive to really achieve the best possible result that you can for the clients.
Yeah, look, and you do that, and it's a long process, and people don't understand that when they come to us sometimes and they say we need insurance or we need to cover some of our risks. The process is really lengthy, and they don't understand it. The cost of going through that process is quite big, but you identify everything. So it becomes your Bible, it becomes a part of your business plan, and and rest assured that you can actually go to sleep of a night time knowing if your factory or your shop or whatever it is burns down tomorrow, that we're going to move straight in and we're going to get you back up and running straight away.
Yeah, that's a great service to have, that one.
Yeah, it is.
Yeah, fantastic. So what I wanted to ask, was there an example that you have of something where, I want to try and get into, the biggest insurance things that you've insured? Is there anything that's been, insanely massive where you're like, well, this is quite a big thing to insure?
Yeah, look, it's an interesting thing. I mean, I do the general insurance side of things and the life insurance side of things, which is not common, but there are certain instances where we've had people that required or needed insurance for $200-300 million loans. So to be able to get insurance for that amount is just enormous, and it's a big job. So we've been able to get insurance for people who have suffered previously from cancer or a brain tumour or something like that. Very, very difficult to do. However, the end result is that they were covered, and that the last example, the gentleman, he had a $50 million a year turnover business, and he got really, really ill. For 2 years or 3 years, he didn't quite meet the qualifications or definitions. But I persisted with the insurance companies and persisted, and one day I said to the deputy CEO of AMP, I said, Paul, this guy's really, really sick, and you keep saying he doesn't meet the definition, but he's losing everything. His doctors said that he's likely not to be with us within a 2-year period, which meets your definition, but your insurance claims manager says no because they don't see it meeting the definition. He had a look at it, we had a discussion about it, and 4 weeks later the guy got a $12 million check. It changed his life. He actually started to recover, and he's doing okay. We're now 15 months down the track, and his health is getting better. He's got financial health, and if you don't have your financial health behind you, it can affect everything that you're doing, your business, your marriage, your health, everything.
Yeah, for sure, because it would put so much extra stress on you too, like especially for someone that's turning over $50 million a year, like your expenses are also probably going to be quite high, and if things do go south, like it's going to be really hard to meet some of those payments. So it's really great to hear a story like that.
Yep.
Because so many times, like, yeah, you do hear examples from insurance companies where they're like, nah, we're not covering that. So it's really nice to hear a change and hear that they could actually pay that out and really help that guy, even though it wasn't quite within the definition.
Jay, insurance companies do have a heart, regardless of what we think. We've never had a claim not paid in my nearly 40 years in this industry. Every time you go to them and you present to them a story based around their definitions, and even sometimes not. We've had insurance companies, Zurich one time paid a person out because while it didn't meet the definition, they understood that there was a loss, and it was a big loss. And Zurich stood up and said, okay, well, we will help this person out because we want to help them out because they think and need to be covered. So insurance can be really good for everybody, and insurance companies aren't as difficult as people think they are.
Yeah, oh, that's fantastic to hear. So do you have any other examples of when like insurance has been absolutely paramount to saving someone's business, like it was going to completely crush them?
Look, we see it on a regular basis where things go wrong. Now, we had examples of small business that go out and they work on mines and those sorts of things, and they present with their certificate of currency, and the mine says, well, you're supposed to start the project today, but it doesn't meet our definitions or our needs, and they ring you up from the job site and they say, we need this today and we need this now. It's a special industry, a special market. You've got to go to the United Kingdom, to Lloyd's of London to try and get these sorts of things covered. So there are times where people are just stuck and they can't work, they can't do this, they're going to lose the contract and whatever. We just go out of our way and beyond, and we make sure that we present something for them as quickly as we possibly can. So having our own underwriting facility makes a difference where we can actually meet those needs. We have people who are about to get on a plane and they ring up and with this coronavirus, we've had people ring up and say, can I insure against it? I'm going to China. And I said, yeah, just don't go to China because today you can't do it. Yep. So it's only, you truly only know how good your insurance is when it comes time to claim. However, there's a lot of people running out there that do not have insurance, and when they have an incident they ring up and say, can I get insurance now? It's just too late.
It's too late once it's done. Yeah. Oh, well, it's great to hear that. You know, some really interesting things that you're talking about here. So we've talked about covering like $200 million deals, $300 million deals. Like, what's the process of that? Like, how does someone walk in and go, you know, I want to insure like this deal for like $300 million?
Yeah, look, it is an interesting process. A lot of brokers just put together what they think is best, but you really have to start a book. So you have to start from the beginning. You identify the risks, and you build a risk register with these people, with these clients or whoever it is, and you build this for the insurance company, and you show the insurance company what the risks are and how you've mitigated them, what your controls are and how effective they are. And what that can do, that can actually reduce your premiums, because the insurance company can say, well, they've got it all in hand, so our maximum risk is not what we thought it was. Insurance companies can only do what they do based on the information they're told, and if we give them more information about the risk, how we we identify any issues, how we're going to mitigate or stop or do whatever, they become a lot more comfortable. So if you're a person, for example, if you're running a company, a plumber, I've got a guy in Adelaide who has 200 plumbers out there, and they do something wrong and have an accident. We had a fire there not long ago which caused about $40,000, $50,000 worth of damage to a restaurant.
Mm-hmm.
The risk is, that employee's done the wrong thing. He hasn't complied.
Yep.
And he hasn't followed the rules, and therefore he puts the company at risk because they're not insured.
Yep.
We do find a way to get around that. It's like the theme park in Queensland. What happened is that those people died on that ride simply because somebody didn't do their job. They didn't follow it through each and every day. And as I've said before, if you do your job properly, everybody else does their job properly, you reduce the risk.
Yeah, well, that's great. Especially as like you're scaling up, because a lot of small business owners, they think, if I do everything myself, it's going to be right. But at some point, you do have to scale up, and it's when you have other people working for you that is something that's completely out of your control. And then even more, it makes sense to make sure you're insured against that, especially if you have like 200 plumbers going out. Like there is so many things that can go wrong with 200 people.
Yes, yeah. And look, it's interesting. A lot of people engage contractors and they don't think to ask the contractor for their insurance. If the contractor doesn't have insurance, then he causes an issue and you're the main contractor. It's your responsibility. And there's such a thing called proportionate responsibility. If they're working under your instructions, it's your insurance they're going to come for. And if you haven't checked his insurance, then you're going to carry the burden of it.
Definitely. So something else that you do is a lot of like financial planning and just preparing for retirement. Is that? Yeah. So a lot of people are, I guess when they're starting a business, they really struggle to make money. But, some of those people do get quite successful and they end up making quite a bit of money. And I guess the burden goes from really finding a way to making money to then preserving the wealth. So what are some of the best ways that you find are the best to preserve wealth?
Look, it's a great question. And as I was growing up as a child, Mum always taught me to put 10% of everything I earn away. So there's the amount of income I've earned that week, and when I was working it was like $42 a week.
Yep.
So my $4 or $5 a week would go away into a savings account. Now if you do that, and it's not the amount of money you put away, it's the term that you put money away. So if you do that each and every week, when you turn 50, you'll have more money than you know what to do with. And that's one of the secrets. It's the secret of compounding interest and allowing it to grow and being sensible. It's nice to see these people go and invest in Bitcoin and earn $1 million of investing, $100 10 years earlier or whatever. We're not always that lucky. But if you consistently put it away and you stick to those goals every week and you put 10% away, it works. And that's why the government's doing it with superannuation. They're making us do it. They're forcing us to save money, and it's a great thing. But if you do your 10% as well, when something comes up, you'll have that money there for you.
Yeah, I think that was a really good scheme they put in place. Because I was reading an article the other day, and it was based on different income brackets. You'd have people that were making 50,000, 100,000, 150, 200 and more. And something that I found incredibly interesting in this particular article was that regardless of the income bracket, 30% approximately of each of those brackets felt like they were living paycheck to paycheck.
It's interesting, you ask, you say that when somebody wins lotto, normally 12, 18 months, maybe 24 months after, they're back in the position they were in before they got there. So it's really interesting when money comes into people's hands, how it slips through. We've got people who are in incomes of $2 or $3 million a year and they still have a mortgage.
Yep.
We have people in their 80s who have been running successful businesses and they still have a mortgage. And you've got to say to them, at 80 years of age, you don't have any superannuation. You're relying on the building that you're in for your superannuation or your business, and then there's a disruptor come along and you've got no business and you've still got a mortgage on the building and you've still got to pay it, it just doesn't make sense. It doesn't work. And the disruptors are going to come in faster and quicker than we've ever seen before. So what we know today is not going to be there tomorrow. And that's how quickly it's going to happen and change. So you have to put it away today. You have to be consistent and religious in doing it. And when you get to 50, at your age, when you get to 50, you'll be able to turn around and say, I don't have to do it anymore. I'm glad I'm here, but I'm going to continue to do it.
Yeah, I think that's fantastic advice that I think people should take on board, because I talk to a lot of my friends, because I get it. Like, I understand the investing, and I think it's a great way to just make sure you're set up, and then you're not having to really work and rely on a government pension, because like how a lot of people in the government really feel about like raising the pension or anything like that. So I'd rather be self-sufficient. So I'm really big on making sure I put as much away as I possibly can, hence like the 2,000 in the account, and then everything else just disappears. But a lot of people, they just don't seem to get it. So what do you think are some ways that I guess would help people to understand like how important it is to prepare for the future?
Look, it's an interesting question. What we need to do is we need to do our research and have a look at where other people are and what they've done and where they go. One of my really good friends, Jerry Harvey, he says, you've just got to put the discipline in place and do it every week and look at it, even if you have to break it down daily. You have to realise and understand what your goal is. If you want to retire at 50 years of age, you have to go back and do a full matrix and do the full figures and say $1 today in 30 years' time is going to be worth 5 cents. Mm-hmm. So I've got to put in CPI, I've got to do the figures. See a good financial planner and they can write for you your business plan for retirement. And it's an interesting document to have a look at when you look at the figures, and you can look at 30 years and you get to the stage of retirement and what that looks like and continues to look like. I'm currently doing my Masters in Applied Finance, and I've just finished one of the courses, which was superannuation and retirement. Mm-hmm. I did this 25 years ago, and it's a very different beast today as to what it was then. Yep. And what the example was is these people were from Wollongong, around the corner. They were retrenched. He was 52 or 53. She was 51 or 52. He'd been offered a job in the Pilbara, so he was moving on a good income, $195,000 a year. Mm-hmm. Only had $270,000 in super. Mm-hmm. And thought, I'm never going to make this. How am I ever going to do this? But when we sat down and we did the figures and we showed him how he could do it, he actually got into the stage where he got to 63 years of age, because he wants to retire at 63, yep, where he never had to want for anything at all, and his money actually continued to grow, and he was drawing an income of $65,000 in today's money in 20 years' time, or 15 years' time it was. Yep. So it's achievable, but you have to do it daily, and you have to do it consistently, and it's the length of time, and I will say that all the time. If you have children and you start putting away, even if it's only $5 a week into a bank account, and when they get to 25 years of age, you'll be surprised how much money's there. There is more than enough to buy a house.
Yeah, it's pretty impressive. Like, just the compounding effect is quite remarkable, and that's something that I focus on a little bit, because I have real estate, and I also spend a bit of cash in stocks as well. So we have a long-term goal of having passive income that's going to get over $100,000 a year. Because at this point, like, we spend nowhere near that, but we feel like making that per year, like say in dividend stocks and real estate investments, that's going to be great, that we can just have that set up. Nothing, if anything bad happens, then there's going to be no financial problems, and we can either choose to work or not to work, and we're going to be fine. I think a lot of people, it would be great for them to try and aim towards something like that, because I think $100,000 in passive income a year over time, it's not a huge thing, and I think most people could probably do that with some dedication.
Yeah, and that's what it is, as you say, Jay. It's the dedication, it's the time, it's the consistency and the persistency. If you stop, and you know this as an entrepreneur or a person in business, if you stop and you get disheartened, you're never going to reach that goal. And if you set it so high, and if you'd set it at $1 million a year recurring income, then you probably set it a little bit out of your goals. But 100 is very, very achievable. And today you can do that. To retire, the government's telling us that we need probably 5 or 6 times our income in a lump sum into superannuation or whatever. The superannuation industry has been a very difficult thing. They change the laws every day and they change the regulations every day. They're going to tax this, they're not going to tax this, they're going to do this, they're going to do that. So it's very, very unpredictable. So you have to have your own plan alongside that as well. So I've got to say that it's great to hear somebody of your age to say, I'm actually now doing something about my future and I'm actually working towards my future and what I want, because you don't often get that. So if everyone can learn a little bit from you, they'll be 100 times better off than they are today.
Yeah, well, I hope so, because like in your 20s is if you're that age, it's really the time to knuckle down and make that happen, because most 20-year-olds, they start to get decent jobs that aren't like the minimum wage ones, and they start to work in a field, and the paycheck increases, but often a lot of time the expenses do. So I try and keep my expenses as low as I possibly can, and then everything else can put away, make passive income, and then, we're all sweet.
It's interesting, isn't it? When we do a budget with somebody, we sit down and we go what their expenses are, and you'll find that a lot of people spend a lot of more money on alcohol and cigarettes than they realise. And when you say your social spending on cigarettes and alcohol is $70,000 a year, they just look at you and go, it can't be. And when you break it down and you show them their shopping docket, because we make them bring in their shopping dockets every week, so that we do this live for 6 or 7 weeks. Every receipt you have, let's go through the bank account, the receipts, and see where you're spending your money, where we can save some money, and you would be surprised. Just smoking. Some people spend $30,000 a year just on smoking.
It's unreal,
yeah.
hey?
Yeah, it's incredible. So people say, how do we save money? And we say, well, give up smoking and you'll save your health as well, and a lot of money.
Yep, it is literally an example of your money going up in smoke.
Yeah, it really is. Yeah.
Crazy. So that's really interesting. So what are some of the investments that you would advise people to go into? Because there's obviously a lot of choices. You could put all your money in Bitcoin. I'm sure that's super sound investing advice.
Yeah, look, it's an interesting question, and not one that I can make specifically for anybody, because if I'm giving advice here on the podcast and somebody acts on that, then I can be held liable. You really need to see a licensed financial planner. You need to see somebody who has a great reputation, and do your research on your financial planners and have a look at what they've done and who they do business with. Investing depends on the risk attitude and whether they'd like to take a risk or not. Investing in stocks or investing in small companies, investing in cash. So you've got to do your risk profile and understand what risks I'm prepared to take with my money. It's like lending somebody some money. If you lend somebody some money, a family member, bet on it not coming back, okay? Because that's the risk you're taking. If it comes back, it's nice. But if you lend them $5,000 or $10,000, you need to prepare to say, well, I'm probably not going to get that back. And it's the same with shares sometimes. You can put it in there and panic. And a lot of people buy shares and they buy them at $2 and they see it come down to $1 and they panic and think, I'm not going to lose any more, and they cash in. It's one of the biggest mistakes we make. If you're going to buy shares, you're going to sit there for 7 to 10 years and then you'll start to see the dividend. Every 5 to 8 years, it should almost double. And that's where it is. That's the compounding effect when you get fully franked dividends and you reinvest and you do all those sorts of things. Or how do you do it? We don't have the time to be active like brokers. I can't sit there and watch my portfolio daily and go, it's gone up 20%, I'm going to take the profit and run. I don't have the time to do that.
Yep.
So find a good financial planner who's active in what they're doing and who can educate you in how to do it. And when you retire, maybe you want to take it over and do it yourself. I was with Con Contista yesterday, 98 years of age, and he's still investing and he's still producing 30-35% return on his money at 98. It's incredible.
Awesome. Yeah, it's pretty impressive. I think a lot of the panic selling I find comes from under-researching a company. And when I go to invest in a company, I'll go through all their financials, I'll see what the growth rate is, I'll see what their balance sheet looks like and make sure it's not trash. And if I see a stock go from like $50 down to $30, I go, fantastic. Now it is an even much better deal. I'm going to buy some more. Because if you have like your full commitment to a company and you confidently have looked at the financials and think that's going to be good, like if it's going down, like that's a deal.
Yeah, and it is. And this is where people don't do the research like you're doing is you sit there and you research it from the beginning to end. You need to understand the company that you're investing in. You need to be comfortable with that. Shares will go up and shares will go down. And we've seen it. We've seen them drop 30%, 40%, 80%. And people do panic sell. When the market goes down, that's when everybody wants to sell. It just doesn't make sense. That's when you should be buying, not selling.
That's right. Yep. Open up the bucket.
Yeah,
it's
absolutely.
raining gold. Yeah. So that's really interesting. So let's I guess transition into real estate. So it's been a little bit turbulent. Like things have gone up, they've gone down. What do you kind of foresee happening with the economy and like interest rates and just real estate in general?
Yeah, great question. Are we heading towards the Japan interest rates? I mean, are we heading towards negatives? Where are we going? My stepfather asked me last Monday, is it possible for us to go into negative rates? And I said, well, Japan's been in negative rates for 2 decades. So yes, it is possible. And he said, well, what does that look like when my money's in the bank? Do they actually take my money away? I said, it doesn't quite work that way. That's not what they're doing. That's the cost of money going into the banks and the cost of money going into business, and that's the cost of doing business. So they're subsidising that. It's a really interesting question when you talk about real estate. In South Australia, where I am now currently living, we plateau, we stop. We don't tend to go backwards like you experience here on the eastern states. So we see Sydney and Melbourne go up and down by 40 or 60%, and it can be crazy.
Yep.
And all of a sudden, within 2 or 3 months, things have turned around or something's changed, and it starts rallying, and then it doesn't stop here. It goes up or it goes down. And so a lot of people, again, tend to buy as it's going up. Oh, the real estate market's good. It's time to get in. Again, just like the share market, it's when it's had its kick in the stomach and it's fallen is the time to buy. And you can't always do it. You're not always... I wish I was that clever. I'd be doing it myself. Real estate is different to shares because you can actually see the property, and a lot of people prefer real estate to shares. I'm not a real estate investor. I don't love it at all. I've seen people just get to the stage of retirement and they've gone to say, okay, it's time to sell the property, and they're losing money. And they're going, oh, well, I'm not going to sell it. Or the market's down and they can't sell it. So it's very, very different to shares where you can sell it at any time you like. The only time you would get stuck with shares is if the government's put a stop on that particular fund, and that would normally be a property fund, a commercial property fund, where there's too many people taking money out, and there's a reason for them to say it's time to stop and slow down because we don't want to see everybody lose their money. So real estate can be good. I've seen people make lots and lots of money out of real estate. We've seen Frank Lowy do it with Westfield and his portfolio of properties, and I've seen other people go the other way with property. We've had an example with some people in Queensland just recently where they had 3 properties in Brisbane, and all of them, he owes more on them than he paid for them 3 years ago. So it can be difficult. You need to be careful when you're investing in property. If you're investing in property as a small investor for retirement, really think about what you're doing, because I'm a great believer that I don't want to lock my money down. I don't want to put it in a place where I can't get to it. In retirement, it's my opinion, and my opinion is different to a lot of people. You need to be able to get to your money in the event that there's an emergency. And one I use is, what happens if one of the grandchildren or somebody has an illness, and the only way that you can have that rectified is send them to America for emergency medical attention, and the cost of that is $300,000-$400,000. If you're locked in property, you can't do that. If you're locked into a lifetime pension, you can't do that. So just be careful when you're locking money into real estate or lifetime pensions. Understand that if you need to get it, you can't get it straight away.
Yeah, very much so. And I guess it comes down a lot to due diligence and really understanding where you're buying, what you're buying, and all those kinds of things.
Yeah, and I think you need to educate yourself in the financial planning world before you go to see a financial planner, so that you can be clear in what you want. My goals are this, and I want to achieve this. And if in the event that there's an emergency in the middle, I need to be able to rely on this. And so do a complete plan. So, yeah, thank you for that question.
Oh, yeah, no worries at all. So there's a lot of young business owners that listen to this podcast, and some people are wanting to start a business, but they're not quite sure. So it is quite a younger audience. What do you think are some things that people can do to start their business?
Listen, when you start your business, I mean, business planning is crucial. I mean, when you say to somebody, where's your business plan? They look at you. But if you don't document what you're trying to do and how you're going to do it, how do you achieve it? We've seen businesses go in, or people go into business without a business plan, and the first 4 or 5 years is great. And then all of a sudden there's no business. They don't have a business plan. They don't know how they're going to continue to grow. And some of them grow exponentially. Some of them grow into multi-million-dollar businesses overnight. And then 5 years later, it's gone. 95% of business fails in the first 5 years. And it's really interesting. If you have a plan and you put in protections, mechanisms to protect everything that you're doing, you will be fine. But don't do it without a proper business plan.
Yeah, of course. It's pretty sound advice.
Yeah.
So thank you guys. Thank you so much for coming on. Like, it's been really interesting to hear like your insight, and you've done so many fantastic things, and there's so much great advice there, which I think a lot of people can take away and learn from. So what's the best way if someone's looking to get insurance, or they're looking to plan for retirement? How do they get in contact with you? Yeah,
listen, I'm easily contactable. I'll give everybody my phone number, and somebody will answer the phone. It's 0403 389 579, or email is admin@cbdis.com.au, which is CBD Insurance Services. Happy to help out, happy to give them a free evaluation in the first instance, and then move on from there. But our service does cost. We do charge a fee for our service, depending on the service that's required. But if you're starting in business, or you've got a business and you haven't got the proper mitigation or insurance or business plans in place, reach out to us and we'll put you in touch with the right people to make sure that the continuation of your business is forever as you want.
Fantastic. So, Lyndon from CBD Insurance, what's one final piece of business advice that you got?
Do your business plan and stick to it, and it will always happen, and get expert advice.
Fantastic. Thank you so much for coming on the podcast. It's been great to have you.
Thank you, Jay. Thank you so much.
And you've been listening to the Blacklist sessions. Thank you so much for tuning in. We've got a lot of great guests coming up. There's so many interesting guests that we have on this podcast from all walks of life, doing so many different things. So, if you're interested in business, you're interested in music, then make sure you subscribed on Spotify, subscribed on Apple Music, any of your platforms that you listen to. And hopefully we'll catch you again shortly.